Hi, this is Hyperwave. I'm Leah Wald here with Tyler Jenks. And yes, Bitcoin's been having an interesting time. So we're going to keep this one pretty short and stick to Bitcoin. And I will already turn it over to Ty.
Great. Thank you very much, Leah. This will be just a brief but intensive look at the price of Bitcoin on a daily, weekly basis relative to the hyperwave that it's still in, and the long and intermediate term downtrends that it is still in. We've briefly gone from negative to neutral on the short term, but I'm going to talk today about going back to the negative. It looks to me like this little pop is running out of steam, but rather than speculate, let's take a look specifically. So we go to screen share. Okay, here we are looking at the hyperwave of Bitcoin. I've got a wonderful group called the Hyperwave Research Group on Telegram that is closed right now for new entrants, simply because we've had so many people that have wanted to get in, and it's just taking too long for Leah and for the others to get to know these people. We will reopen up again, but right now we're overwhelmed with the amount of research this group is doing. We have found hyperwaves all over the world. We will be making that public. But what you're looking at right now is the Bitcoin hyperwave. And the big debate that has been going on in my mind has been, is this going to be a funky hyperwave that ends at phase 3? And it was not. It tried 11 different times, but then it failed. Or will it be a funky hyperwave that ends at phase 2? And we're inching closer and closer to that line, which comes in at about 5,000. Right now we're at 6,582. I am convinced, as are a number of other TAs that I respect, that we are going lower from this level of 6,500 and at least test the 5,000 level. I do believe that there's a chance, but it's not huge, but it's probably on the order of 1 in 4 or 25%, maybe as high as 1 in 3 or 33%, that we are able to hold that phase 2 line. Because if we don't, Hyperwave says that we go back to the beginning, which is the 1,000 area. Okay, so let's take a look at where we are on this chart by just not speculating, but looking at the numbers. Here are the stop and reverses coming down each week from the top, which was all the way 6 months ago, and it currently sits at 7,600. We would have to get up to 7,600 to break the back of this one particular indicator, which, as you can see going back into time, was very powerful, telling you when you were going up, and has been even more powerful telling you when you are going down. Okay, let's take a look at the moving averages. We're using 3 of them, the 2, the 7, and the 30. And you can see that the 30 is now beginning to accelerate down quickly. It was not very long ago that we were speculating if it was going to turn around and how quickly it would do it. And that's now behind us. You are going to see that drop very sharply in the coming weeks. From a consensio point of view, that's very important, because somewhere out here, we are going to have the 30 come all the way down to the price, and it will become a very difficult overhead resistance for the price going up. I believe that before that occurs, the price will also be much lower. And right now, I'm going to just blow this up a little bit so we can see where we are with the short and the intermediate term. The price is squeezed between them right now, and the short term is trying to turn up and go above the intermediate term. It has not done that. It would need to cross above about 6,700, which it did earlier today, but then it has fallen back from that level. Okay, let's get rid of that and look at the Bollinger Bands. This is a close-up of the weekly Bollinger Bands. You can see how we came down very close, but never actually penetrated the lower line, and now we're well above it again. The lower line is coming in at 5,289 this week through Sunday, and you can see where the price is. We need to break below that. I like the fact that it is getting so close to the 5,000 area that if we do get a spike down on a weekly basis, we could actually hold that area, which would be the phase 2 line. Now, when Bollinger breaks below the lower line, I would like to see a close below that line and a fairly deep penetration where we get an entire candle with the highs below the lower line. If we don't get that, a wick above the lower line with the rest of the candle below it would be satisfactory to me, but not perfect. But as long as we keep staying around this area without making a definite penetration of that lower line, this is bearish to me. Okay, I'm going to take those off and take a look at the RSI. And to do that, let's just roll forward a little bit, reminding everybody of all of this period that was in the overbought territory relative to the RSI, and not a single week in the bear market have we done that. I've also mentioned that I do not like the fact that this is taking so long to get where we want to eventually get and form a bottom, because now the RSI is creeping up again. And we have gone all the way back up to 43. We need to get below 30 and probably sharply below 30, at least for a week or two, to satisfy what I believe is the right interpretation of relative strength index that had been overbought for such a long period, to wash all of that optimism out of the market and set us up to go higher again. And finally, we're going to just take a look at the MACD. And you can see I've been saying for weeks, and now we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, I would say 10 weeks, 2.5 months, in which these two moving averages have been basically parallel going lower, which means the histograms have been almost identical over that period of time. Even with these small pops that we get on various weeks as we've come down, as we've had these last 2 weeks, that to me is not impressive. What is impressive is the relentlessness of this MACD in negative territory, getting lower and lower. And I look at that as negative also. So all we've done is looked at the weeklies. We don't need to look at all the intermediate term times, but I do want to look at the 30-minute chart, because once again, what we see is after these tremendous spikes that only last about 30 minutes, we end up going for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 periods of weaker and weaker action. No follow through. If I take this back, you see on each one of these pops this strange behavior in which price simply drifts for a very long period of time. This is only a 30-minute candle chart, but you see this activity. And then another very short-term pop, and then the same activity again as it drifts lower. To me, that is not impressive behavior. That is not behavior that is beginning a new bull trend. With all the longer term technicals that I've just pointed out, what we need is, if this wants to go up, it needs more than 1 or 2 30-minute periods on volume. It needs follow through with increasing volume to be able to break through all the overhead resistance that we get when you take a look at these long-term bear movements. This was the most impressive period that Bitcoin was able to put in, and it lasted about 5 weeks, a little over a month. But even that, all it did was go from a very oversold area around the 6,000. It worked its way up steadily for a very long period of time, over a month, and then ran into overhead resistance and was quickly rejected by it, and we've come all the way back down to the bottom. Here, we're getting no follow through at all on these short-term bursts, and I will very probably this afternoon go back into a negative short-term position, meaning that I believe the next 5% move is not going to be to the upside, it will be to the downside. I never did go positive on this last week and a half move, even though I was tempted to, because it did look like we could get up to 7,000. But after this last run to 6,700, and now the fade once again, I have not completely made up my mind. I want to watch it for another several hours, but I will don't be surprised if I put in a short-term target of 5% to the downside, which would only take us down to about 61 or 6,200. I'm not going to go out on a limb at this point and revisit my 5,300 target that I had when we were lower, all the way down below the 6,000 level. But we'll take it a step at a time. I'll make smaller calls. So with that, that is my view of Bitcoin. I'm not going over any of the fundamentals today. I did listen to Jay Clayton, the head of the SEC, live yesterday in front of a congressional panel. And they did ask him about the cryptos and the recent comment that was made. I would suggest to everybody that is interested in what I think is a very important shift in the SEC, and we've talked about it for the last 2 weeks. And Tone, of course, had a tremendously important many-hour vlog with some very key attorneys and others about the implications. But yesterday, when I was listening to Jay Clayton, he was pretty clear on backing up what his henchmen had said. But to get a real understanding of what was said by who and why it's so important, please take a look at Medium today. There is a post that analyzes word by word, phrase by phrase, what those comments were. And I've reread it 3 times. I suggest to you all to do the same thing. It is a wonderful piece, and either Leah or I will include the link in Twitter, but you can find it easily on Medium. It was posted earlier today. And with that, back to Leah.
Hey, Ty, actually, back to you. I'm going to screen share a viewer in our live chat wanted you to check out Bitcoin versus the Yuan. If we have enough time, how do you feel?
Oh, sure, absolutely.
Let's do it. The comment was that a potential double bottom. I threw it up as a comparison against the dollar.
Okay.
But I can change the indicators as you see fit.
Yeah, it would be great to throw it up against the yuan, and let's see what that looks like.
Yeah, so the yuan is blue.
Oh, so you've got the yuan.
So I got the yuan, and then our bars are Bitcoin dollar.
The bars are Bitcoin dollars. Bitcoin in dollars, okay. And
I can switch to
no, that's okay.
Okay.
I just need to understand what I'm looking at. And the blue line is simply, that's not Bitcoin yuan, or is it? Or is it just the yuan?
It's Bitcoin against the South Korean won.
Okay. And was there a specific question by the viewer?
The viewer asked if you're seeing a double bottom.
A double bottom in the yuan, Bitcoin yuan. We have a triple bottom right now just in Bitcoin dollar.
Apparently it's only visible on candles. All right, let me switch that for you.
Yeah, the yuan looks like a double bottom because the first bottom was much higher compared to the last two. What we don't have on this chart is a wick off that first bottom, where, because we're looking at candles, we do have a wick, but there is, the only reason I'm kind of going through this.
There you go. So now the candles are the yuan.
The candles are the one. Okay, so we actually did
Correct.
get it.
Or not. Sorry, guys. One sec.
Yeah.
We're going to just not throw it up. Here you go. Against the, why is it not doing this? Okay, wait, hold on. Anyone wants to tell me why it's not working out? No problem.
We are going to do 3 different shows starting tomorrow, where we're looking at the fundamentals and the technicals of 3 different markets. One is the Asian market, and we're going to go into a lot of detail about the yuan, but also a number of other Asian economies and markets. And then we're going to do one on the European market, and then we're going to do one on developing markets, particularly in Africa and in South America. So we will be putting together a bunch of charts, and because of this question, we will also be comparing various places to Bitcoin. But it's an interesting question from the point of view of the yuan is weakening against the dollar because of all these trade talks. And the Chinese market, the Shanghai market's down, as we said in a previous vlog, well over 20% now. It's in a bear market where the US market is still very bullish. And you're going to find some very interesting charts that we talk about tomorrow. But it's until we actually get the charts right. Let me just make a simple observation. If you go back to Edwards and McGee, they were one of the first to identify double and triple tops and bottoms. And I've followed that now for 40 some odd years. And as Tone Vase has pointed out, there has been a deterioration of the effectiveness of double bottoms and double tops, calling tops and bottoms. In fact, Tone has taken the opposite tack that Edwards and McGee took over a half century ago, which is they are more likely to fail than to succeed. So when we see a triple bottom on Bitcoin at the 6,000 level, between 5,800 and 6,100 basically, and we can't get up away from that, that is another indication it is probably going to fail the next time down. Same thing is true on double bottoms and double tops, triple tops and triple bottoms. There are some times that those do work out very well, and there are some conditions under which they do. But what I'm telling you now is the traditional way of looking at double tops, triple tops, double bottoms, and triple bottoms has been eroded for whatever reason, probably because.
Ty, we lost your mic. Yeah, sorry, I know, guys. I'm not very good with TradingView. Actually, I was messing around with some Asian equities. We're going to do Asian equities tomorrow, which is going to be fun. Ty, I'm watching for you, so just try talking anytime. Okay. Otherwise, I think we did cover. Ty, give me a thumbs up if you feel like we covered stuff today. Okay, we got the thumbs up. All right. Well, we will be back later or tomorrow with more information. But thanks for watching. Have a great day.